I'm Bambi Francisco, and I'm speaking with Yoav Leitersdorf of YL Ventures, and we're here in Zaragoza, Spain. We're at the Roman Theater attending the Innovate Europe conference. Yoav, thanks for joining me.
Hi, Bambi. How are you?
I'm very well, thank you. Now, it's been very difficult for entrepreneurs to raise funds in the U.S. It's also a tough time for VCs to have any M&A or IPO exits. What's the climate like here?
I think it's very similar to the way it is in the U.S. We've had a lag, Europe woke up maybe 3 to 6 months after the U.S. in terms of the recession, but it's pretty much the same thing right now.
Are you seeing valuations tumbling 20–30% from some of the valuations in 2008?
50% and higher, tumbling valuations, yeah.
That's pretty tough. Now, you were on a panel last night, and the discussion came up about the difference between the venture capitalists in the U.S. and the venture capitalists in Europe. Basically, the takeaway was that the U.S. venture capitalists provide more value add. What's your comment to that?
Yeah, absolutely. I think the U.S. is blessed with a lot of VCs that have significant entrepreneurial and operational experience, while in Europe, most of the VCs are, let's just say, ex-bankers, consultants, not necessarily operational entrepreneurial experience. And so, on the whole, they've been less helpful to entrepreneurs than they are in the U.S., especially in Silicon Valley.
You're trying to change that, having a background as an entrepreneur, correct?
Yes, so I started, grew, and sold 3 companies, and out of that came my aspirations to become a venture capitalist. We have a unique model of investing where we don't necessarily aim for huge exits, home runs, like most VCs, but rather we look for small teams that with a lot of added value, network connections, and actual help selling product. We bring these companies to relatively small exits of $20 to $80 million within 2 to 3 years of investment.
Now, that's a very different model from the traditional VC model. Is it because, does that model work today because there are no exits, or is it that the traditional VC model just needs to change, and this is the model?
So the funny thing is, I actually came up with this model about 3 years ago when we're still experiencing a boom time. I basically came up with it because I thought it was more appropriate for entrepreneurs, or at least it addressed a need that a lot of entrepreneurs had for this kind of financing. What happened in the interim was that we did have a financial market meltdown, which basically killed all the big exits, and now all the exits we have left are small exits, which basically kind of plays to the strategy of my fund.
But does that make it more difficult for you now that the bigger funds may start looking, I don't know if you call it downstream, but they'll start looking at smaller exits and probably more competition for you?
So the problem for the big funds are that they are big, and so they're expected to return significant amounts of capital to their limited partners. They can't really do that with small exits, so they are in trouble. I think the small funds actually have a leg up in this kind of situation.
What are you seeing? What type of innovation are you seeing here? And you invest in Israeli and European companies.
Yeah. We generally look at the following sectors: internet, mobile, digital media. We're very much focused on software as a service as a preference at the moment, although I'll still look at anything in these sectors. We do have an additional requirement that kind of started since the market collapse, and that's for the companies to actually have a little bit of revenues already. It's one of our screening criteria at the moment, which we didn't have a year ago, but now we have.
That's good, but it doesn't have to be, you said, several thousand euros a month. Right. But as long as they don't have to have scale, as long as it looks like it can scale. Right.
That's exactly right. We're looking for some proof points that the product is valuable and customers are buying the product. But that's all we need. In terms of achieving scale, we'll help the entrepreneurs do that.
Can you name some of your investments?
Yeah, I'd like to name one which I like very much, a company called Clicktail. That is spelled click and then tail, TALE.com. It's a company in the web analytics space. Very exciting company. When we came in a little bit over a year ago, we had a trickle of revenues, but now the company is profitable and achieving significant revenues, growing double-digit percentage month over month. So I'm hoping that the model is being proven for the first time at YL Ventures with this company.
Okay, and just one last question. Again, on the panel last night, you talked about encouraging entrepreneurship in Europe. And so how do you encourage more entrepreneurship in Europe?
Well, I think it's a matter of setting expectations. I think I've said on the panel that the amount of big exits that came out of Europe are, a handful, very very few. On the other hand, there are a lot of big VCs in Europe as well. I personally don't think that the traditional venture model works for Europe. And so I'd encourage entrepreneurship by having entrepreneurs go to smaller investors and pursue less ambitious exit strategies.
Okay, thank you very much, Yoav. I've been speaking with Yoav Leitersdorf of YL Ventures. I'm Bambi Francisco.